Awesome. Good afternoon, everyone. My name is Crystal Josie, and I am the current Assistant Director of Alumni Engagement. I am also a 2007 graduate of the university. Today, for our Spartan Share series, we are going to discuss the home buying process. We're glad that you could join us, but before we get started, I want to go over a few housekeeping items. There are two ways you can attend today's event. One is via the Hangout, the other is via YouTube. If you're attending via Google Hangout, we will use the Q&A feature. If you look to the right of your screen, there's a square made up of smaller squares. If you click on it, it should open up and give you two options. One option should say Showcase, the other should say Q&A. If you click on the Q&A icon, it should open up a large rectangular white box with an area for you to type text. That will be the way you can submit your questions for today's session. If you are watching the event via YouTube, there is a comments box under the stream. You just type your comments there in the box, in the comment section. We will address those questions throughout the session as well. Now let's introduce our panelists. First off, we have Elisha Gutloff. She is a 1992 graduate of UNCG. And with over 10 years of real estate experience, she brings a wealth of knowledge and local expertise to the Greater Triangle real estate market. Her expertise is in working with veteran buyers and first-time home buyers. As a former teacher in Wake County Public Schools, Elisha strongly believes that knowledge is power and enjoys educating her clients about the home buying process. She understands the impact of a solid real estate investment, and her passion is working with buyers to assist them in making smart investments in their family and their future. Next, we have Michael Lassiter. Although he's not a UNCG grad, he is a product of the UNC systems, and he's an ECU graduate. In 1996, he graduated with a Bachelor of Science in Business, Industry, and Technology. With nearly 18 years of banking and mortgage experience, Michael is dedicated to providing the best client experience possible with each interaction. He's with the Lassiter Mortgage Group, and it's a full-service loan origination team committed to providing innovative mortgage solutions and real estate strategy. In his role as a team leader, Michael stresses the importance of integrity, a positive attitude, patience, creativity, and respect for all things. We also have attorney Natalie Watson. Natalie graduated from UNCG in 1998 with a Bachelor's of Arts in Political Science. She went on to law school at North Carolina Central University and graduated with her Juris doctorate in 2001. Counselor Watson is a practicing attorney in North Carolina with nearly 16 years of experience. While she has a vast knowledge in a variety of areas, she often focuses on real estate. We're going to turn it over to Elisha to get us started.
Okay. Thank you, Crystal. Good afternoon, everyone. First, we'd like to thank the Office of Alumni Engagement for welcoming us to share in the Spartan Share series. This is a great opportunity for us all to connect with fellow alumni and share a wealth of information. We are all excited to be here this afternoon to talk about the home buying process and to share this information today. You do see a flow chart that's pictured which outlines the home buying process, and often the first two steps, which are selecting a real estate agent and obtaining financing pre-approval, sometimes can happen simultaneously and usually are normally your first steps that would occur throughout the process. Many agents do find that they work with a team of service providers, including lenders, attorneys, and inspectors that are available to assist buyers with the process during the home buying process. Today I'm going to begin with the process and talk specifically from the Realtor standpoint what happens during this process. The first and what I find to be the most important step in the process of purchasing a home is the buyer's consultation. During this consultation, your agent will meet with you and analyze your needs and criteria for purchasing a home. This is your opportunity as a buyer to share your vision as well as your wish list for anything that you would want to include as you go through this process for looking for a home. The agent will definitely work with you and share information to you that's local for your specific real estate market in your area. They will review and identify inspections that may be necessary or inspections and explain the process for all inspections that you may occur throughout the transaction. And they will also identify a timeline for you that will be driven based upon your ideal closing date or your desire to be in your home, and then also provide or create a timeline based on what the expectation is for how long it should take for you to select and view properties and identify properties to make a purchase to close on. The next step is going to be your selection and viewing properties. This is often the most exciting and most fun part of the process. This is where you actually get to go out and look at homes. I do encourage my buyers to take a notebook with them so that they can take notes and get feedback about the properties that they look at. All buyers throughout this process or this step of the process may find that this may be an opportunity for them to refine their search and consider some things that they may not have thought of otherwise. Your agent at this time, as you're walking through properties and viewing homes, will definitely create a listing alert for you that will come directly from your local multiple listing service. This search should be customized based on the based on the criteria and the information that you have provided during the buyer's consultation. As you coordinate and schedule appointments with your agent to look at homes, your agent will also provide a wealth of information providing closed sales for a specific neighborhood that you're looking in so that you can see recent sales that have closed in that neighborhood. If you are looking or need to be in a specific school district, that is certainly something that would be shared or information that will be provided during that time as you're walking through. Your agent will also be able to provide information about the days on market for that property, as well as identifying areas of opportunity that any inspector may identify once you are under contract and are walking through that stage. So again, as you're doing your home tours, this is a great time to ask questions about the property. A lot of times, many agents will relay that information directly to the seller so that you can have any questions answered and get additional information. Once you have identified and found the property that you would like to submit an offer on, your agent will provide additional data to you to help you put together the best offer possible for that piece of property. Such information, again, you're going to consider comparable sales that have recently closed in that neighborhood to help determine a price. You're also going to identify the closing date that you would ideally like to close on the property. And another important piece will be the inspection period. Once your offer goes under contract and you have an accepted offer, that day one, the clock starts ticking, and you will have what's called a due diligence or inspection period. This period is normally a 3 to 4 week period in which you as the buyer have the opportunity to fully investigate all areas of the property by way of inspections, appraisals, title searches, but any investigations that you would want to conduct on the property during that time happen so that the team of service providers working with you can remove any contingencies. During this part of the process, your realtor, your lender, and closing attorney are all working very diligently on their behalf, on your behalf, to remove all contingencies from that property and to help and assist you to get to the closing table. While this is all happening behind the scenes. Your agent is communicating with your lender and with your closing attorney to make sure that all things come together so that on your closing day you have a smooth transaction and you can get the keys to your brand new home. After this part, I'd like to have Michael Lassiter, or turn it over to Michael Lassiter, who will discuss with you the process for obtaining your mortgage and then also the criteria that happens for removing contingencies once you are under contract.
Awesome. Thanks, Elisha. Want to say thanks again to the Alumni Center for UNC Greensboro for having us on today. Just to kind of piggyback on Alicia's comments, in today's market, the biggest thing is getting prepared for your home loan up front. We have a slide up front that talks about 10 kind of bullet point items that I really wanted to touch on, the kind of the do's and don'ts in preparation for a home loan. One, you don't want to apply for any new credit of any kind because your credit is monitored once the lender you apply for your mortgage up front and the lender pulls your credit report. Any existing credit cards that you guys have, you don't want to max out or overcharge during the process, again, because your credit is monitored. We don't want to consolidate any debt to one or two credit cards. There's a lot of bad information in the market. Definitely debt consolidation is something we can look at, but not during your application process for your new home. We don't want you to make any major purchases such as new furniture or buying a boat or a new automobile, etc., without speaking with your lender first. Do not make any uncharacteristically large payments into your account. The documentation that's required for your loan, which we'll go through in just a moment, that again is monitored through the process. So any large deposits outside of your normal direct deposits from your pay would require explanations from your lender and have to be documented. Number 6 here is do keep all existing credit cards open. There's a lot of bad information out there that says you should pay off your credit cards and close them down. This can actually destroy your credit score, which you certainly do not want to do. So you want to keep one thing that goes into the credit scoring model is how long you've had a credit card account open. That is definitely a factor on your FICO score. So one good thing to do is just keep those open even if you pay them off. Number 7, do be prepared to pay off any collections if required by our underwriting team during the process if it's required for the program that we're particularly doing for you on your new home. Do provide documentation for satisfied judgments or paid tax liens. Any judgments, tax liens, foreclosures, previous bankruptcies, those will all have to be addressed up front with your lender. So getting started early in the process, which we'll touch on just a moment, is definitely key. You do want to stay current on all payments for your existing monthly obligations because, again, it's all verified. As a lender, we look back really heavily at the last 24 months on your credit reports. Do call your local lender before making any financial decisions or changes to your normal financial routine. Basically, we're here to kind of walk you through that process. So if you're working with us or another lender, please make sure you reach out to them before making any major financial decisions. Next slide, Vilma. The next slide we've put up here is successful tools for having a great home buying experience. Getting pre-approved up front is one of the biggest and most important steps in securing your financing for the new home. There's basically 3 buckets of loans that consumers can choose from. You have government loans, which are FHA, VA, and USDA are the 3 buckets of government loans. These loans are basically insured by the federal government with mortgage insurance, etc. for the lender. The second bucket of loans, which are the most common, is your conventional conforming loans, which are Fannie Mae and Freddie Mac, are the 2 largest investors you guys may have heard of in terms, etc. And then the third bucket is jumbo loans, which are loans above $417,000. So even if it is your first time purchasing a home, some people do buy a home that's a little more expensive than others. You would fall into jumbo guidelines, which are any loans above $417,000. These all carry different parameters as far as down payment requirements, upfront, etc. On the screen here, you have a part of the pre-approval process is a local professional like Elisha would send you to a local lender like myself. We would request the financial documentation that you see on the screen here. Bank statements. We want to see, lenders want to see your last 2 months current bank statements, all pages. Any retirement accounts you guys have, we want to see the last 2 months of those accounts, all pages such as 401k, mutual funds, any investment accounts you have. We want to see your 30 days most recent pay stubs. We also want to look at your last 2 years federal tax returns. If you're self-employed coming out of college, lenders want to see a good 2-year history to support your income. So if you come out self-employed, you will have probably about a 2-year wait in knowing that. So if you're a standard W-2 employee, and it can be verified, you do not have to have the 2 years. We can go off your employment offer letter and your current pay stubs. We can also count your previous college experience, even though you were a student, as 4 years of employment, even though you may or may not have been receiving income during your college years. The government wants us to collect a valid ID. Valid IDs are green cards, North Carolina driver's license, passports, etc. Earnest money, we want to keep a copy of your earnest money up front. This will be when you write an actual contract, when you find that dream home with Elisha, you'll write your contract. The seller will ask you to write an earnest money check up front, which will be a part of your down payment on your new house, if it in fact is required for the loan. If you're a veteran or any type of disabled veteran, we want to see your awards letters from VA through the Veterans Administration. Again, that's a part of one of the government loans that we offer and other lenders offer. If you've been through a divorce or separation, we want to see the legal binding documents as well. Mortgage statements, if you own any other residential real estate property, we're going to want to see current mortgage statements that outline your taxes and insurance. And if you've been through a bankruptcy, we're going to want to see your bankruptcy papers as well. Usually the wait term on that is anywhere from 1 to 4 years, depending upon the type of loan you choose. Okay, next slide. And just briefly, I'll walk you through the process of the pre-approval. So you meet with your lender, you provide all the documentation that we just mentioned. The lender will walk you through what we think is the best program based upon your financial goals for buying the house, whether it's a FHA or VA or conventional loan. We'll determine your loan amount and a purchase price that you're comfortable with, you and your family, and you guys will go shopping with your local realtor. Here at Movement, what we'll do is we'll take all your financial documentation and we'll submit you into underwriting up front based upon the parameters we have selected. So if you've chosen a $250,000 house and you're putting 5% down, that's where we're going to submit you in, and actually goes into an actual underwriter. The underwriter is the person in the bank who actually has the authority to sign off and physically stamp your loan approved. Once the loan is approved, you will be conditioned for steps for closing. And those are, standard conditions are we have to have the home appraised up front, make sure the value is there to support it. We'll order that through a third-party licensed appraiser. We want to see the clear earnest money of the checks that you've written for your down payment up front. If there's any deposits that need to be explained based upon the financial documents that you provided in the upfront underwriting process, those will need to be explained. Once that's all back to the lender, we submit it back into underwriting, and they clear your file for closing. Our process here takes about 7 business days from initial submission. Once your file is cleared for closing, which is ultimately where you want to go, your file will move into our closing department, and the lender will send your closing instructions and documents out to your local legal professional to close your loan. The legal professional will prepare your closing disclosure, which will again go through all your numbers that your lender and everyone went over with you up front, and then you'll show up with either a wire transfer or a certified funds check drawn out to the attorney's name on closing day, and you will get the keys to your new home. This process is a good 30-day process from application to close. The industry is about 45. We recommend if you're serious about buying a new home, I would start thinking about this 3 to 6 months out and contact your local professional and lender to get started. Thank you.
Thanks, Michael. So now we're going to turn it over to Natalie.
Good afternoon. Again, thank you, Crystal. Thank you, everyone, for this opportunity. I always say when I make these presentations, if you're working with a good real estate agent like Elisha and you get a good lender such as Michael, the process once you get to my office should be very simple. You should have most of the time have no contact with your attorney until the day of closing if everything goes smoothly. And that is, I think, the biggest part that I can stress is to make sure that you work with your lender and you work with your agent to make sure that everything goes smoothly. If you provide everything that the lender asks for, if you do everything during the due diligence process that the realtor asks for, once you get to closing, your process, you come in, closing is the actual transaction where the property is transferred from the current owner to you, to the new buyer or to the new owner. And so the situation should be that you come in the closing, sign your documents, and you're good to go. Of course, that's not what always happens. Elisha mentioned smooth transaction. I think Michael mentioned something about separation papers. The tiniest issue that is not disclosed to your agent or to your lender could create a huge problem at closing. So the two biggest things that I want to discuss are managing expectations and surprises. As far as managing expectations, Elisha mentioned a closing date that you are comfortable with. That is what every buyer is always focused on, the closing date, the closing date, the closing date. And they expect that when they come to my office and close, they're going to get their keys and magically move into their house that night. And it's always important to remember that you are not the only throng in the process. You have a seller, you have a lender, you have a courthouse that may or may not be open to the end that day. There's always something that could come up. So make sure that you manage your expectations with your realtor. I always get nervous when a U-Haul truck pulls up in my office. Someone is ready to close, and all of their things are packed on a truck, and it's 3 o'clock on Friday, April 30th. And we have to do everything and get everything to the courthouse by 4:30 so that they can move over the weekend. And honestly, sometimes that just doesn't happen. And it's because there was a disconnect between making sure that the buyer understood there may be something that happens. And it may not be your lender's fault. It may not be the attorney's fault. Sometimes the seller's not ready yet. Sometimes the seller is late. Sometimes the seller has to bring money to closing. In this market, there's short sales. There's lots of, I did a closing the other day, and the seller had to bring money to closing and didn't realize how much, and we had to push it back a couple days to make that happen. So managing expectations is a real big issue as far as getting to the closing table and making sure there are no surprises. If you are closing on a Friday, if you're, I always tell people never close the same day that your current lease will be up, because you never know what could happen. You never know if the closing documents could come that afternoon with your name misspelled, and just the 35 or 40 minutes it takes to get a new package might mean we cannot record until the next day. When I say record, when you come to my office and sign your documents, those are the documents that bind you to the lender for the loan that you are receiving and certify that you are now the new owner. That is not official until those documents are recorded at the courthouse. So you may come in at 9 o'clock in the morning and sign your documents, but it doesn't mean that you're the owner until those documents are recorded at the courthouse. A lot of people say, well, can I just go in? Can I just go by the house and see how everything is? If it's not recorded, we always suggest you don't do that. We had someone walk in with a can of paint, and the paint fell through the floor, and it hadn't recorded yet. The insurance was still on the old buyer, the old owner, and it just created a mess. So again, making sure that you manage your expectations as far as when everything is going to take place. I'm closing on a Friday afternoon. Will I be able to move in this weekend? Those type of things always make the closing process smoother. And then Michael mentioned something that triggered a thought about surprises. Make sure that you are upfront with your lender and with your realtor about everything. There's nothing worse than someone coming to closing with a spouse that nobody knew they had, or coming with a new spouse, but the old spouse, coming with someone that's on the previous deed as a seller or whatever, and not knowing that person now is an ex-spouse, because those people still have rights depending on divorce, etc. So making sure that you do not surprise your lender, you do not surprise your realtor. I've had quite a few where I've had people say they got married in Jamaica. They didn't know that was legal, so they didn't know that that meant they had to tell that they had a spouse, and that kind of thing can really make a huge difference in a closing. That a lender does not want a spouse that they did not know about, and so we have to call the lender and make all these changes. That is going to be a huge delay for closing. As far as the actual closing, you come into the office, you provide your ID to the attorney, and then you proceed to go through the documents. I have a lot of people that come in and say, I'll just sign wherever. And it's really important that you pay attention to what you're signing, that you make sure that you understand what you're signing. Because anytime any of these documents come back, you want to make sure that you understood. As far as, for example, there's a document that you signed there that's called the note. The note tells exactly how much you're borrowing and how much you are responsible for paying back to the lender. You want to make sure that if you have a question about a document, if you don't understand, that you ask your attorney to explain to you what this is you're signing. Because every document in that package is important to the lender and is important to you to maintain your ownership and your relationship with the lender as far as the closing. Again, the closing is not complete until it's recorded at the courthouse. And so I always maintain there are sellers that we do have situations where buyers come in, they already live in the property, or they've already made an arrangement with the seller. We always advise against that, but we tell you that, whatever you're comfortable with, but we will tell you that you do not own the property until it's recorded at the courthouse. So if it's a situation where you get to the courthouse at 4:30 and they say no more recording today, you don't own the property until Monday. So it's very important that you stay out of the property and maintain the seller's ownership while they still have their insurance, while their insurance still covers the property, while they still are the owners of the property. The closing process is, for some reason, it's really intimidating to people. I don't know if it's because attorneys are involved. I don't know why attorneys would be intimidating, but it intimidates people. I don't know if it's the documentation. Some loan packages can be really intimidating. They have tons of documents that seem to ask the same things over and over. And I tell people that every document in the package is for the purpose of making sure that you are covered and you know what you are required of and you know what they are required of is their responsibility as your lender. There'll be questions asking about your appraisal. There'll be questions asking about your taxes. We no longer have sellers in our closings just to make sure that there's no information being passed. It's really none of the seller's business what your loan is set up, how your loan is set up. And if you bring other people to closing, my office typically will, if it's not your spouse, will ask if it's okay for that person to come to closing as well. Sometimes we have parents come when we have students that are just coming out of school. We have parents come to closing, and we tell them that it's not their right to sit in the closing. We have to make sure that that's okay with the buyer. So my part is really easy as long as you maintain your expectations with Elisha and Michael's part. As long as you have given all the correct information to your realtor and all the correct information to your lender, when you get to the attorney's office, it's just a matter of sitting down and signing the papers. As long as there are no surprises and as long as your U-Haul is not parked in the lawyer's office. Because I tell you, 99% of the time when that happens, it doesn't turn out well. I'm not sure if anyone has any questions.
I don't see any questions up right now, but what I will say is I have a few questions that I've kind of prepared. You all talked about, give me 1 second. You all talked about, how each part of the process works, but how do you go about selecting your lender? What are some things that you should consider about when choosing a realtor, or how do you know who you should choose as a closing attorney? I know oftentimes they'll provide you a list and they'll say, okay, here are some attorneys that we generally work with, and you pick one off the list. Do you recommend that, or do you recommend going with someone that you've researched? Kind of share some insight on that.
I don't know if that's directed to me. I usually get my referrals from agents or people that I've worked with previously. I can't, of course I would tell people don't go to the attorneys on the list. Pick your own attorney, because I'm one of the attorneys that's not on the list. But it's really what you're more comfortable with. A lot of time people do have an attorney in mind, or they have a realtor that has an attorney in mind. Make sure that you feel comfortable with that attorney. Like I said, 99% of the time you won't have any contact with the attorney until the last day, until the day of closing, if everything goes smoothly with the agent. So it's really what makes you feel comfortable in your decision.
Michael?
Yeah, I would say from the lending standpoint, usually clients are referred to us by great real estate agents in the local market. When you're looking for a lender, you want to look for you can get a mortgage anywhere, I mean at credit unions or any of your local banks, etc., or national banks. We are actually what's called a direct lender. A direct lender would be someone who sells direct to the GSEs or government-sponsored entities, Fannie Mae and Freddie Mac. The reason you want to work with a lender who works directly with these parties is some lenders have risk tolerances, and if you're working with a direct lender such as Movement Mortgage, we don't have what's called overlays, which are, credit guidelines may allow you to underwrite a file with a credit score like FHA, for example, really doesn't have a minimum credit score requirement, but most lenders, including direct lenders, pretty much cut it off at 580 or 640. Most an overlay would be 640 minimum credit score. Us as a lender, not having overlays, being a direct lender, we will underwrite down to 580. So that's just one example of why working with a local direct lender is more valuable than working with an out-of-state lender, for example.
And from my perspective as a realtor, I think one huge misconception that many buyers don't realize is that we as service providers, realtors, lenders, attorneys, we are working on your behalf. So in essence, you are hiring us to negotiate and represent you throughout this transaction. So it is important to work with someone that has knowledge about your local market, that is clearly communicating with you and willing to adapt and meet your needs and criteria. Oftentimes when I'm interviewing or I'm being interviewed by potential buyers, I'm always asked, well, are you only going to show me 10 homes? Because I talked with another agent that said, I'm only going to show you X amount of homes before you're able to make a decision. And as an agent, you really have to be able to listen to your client's needs and be able to respond accordingly. I think it's important to set clear expectations at the beginning. And part of that process as a buyer is to ask questions about the market, ask questions from your real estate professional about are they knowledgeable about the school district, if that's important to you? Do they have knowledge about the specific location that you're interested in? Are they fluent with your type of loan process? Because a lot of times many buyers do come to real estate professionals looking for guidance on an inspector, looking for guidance on a lender, and who will best match my needs, whether it's down payment assistance or a veteran buyer. So I certainly say keep that in mind when you're interviewing a lender primarily or a real estate professional. Ask as many questions as possible, but make sure that that agent or professional is setting clear expectations about the process. I always tell buyers you can never ask too many questions. There's a lot involved with this process, and you may find that all the information is kind of being funneled out to you at one time, and it's a lot to absorb, it's a lot to take in, but throughout the process, continue to ask questions and make sure that those questions are being answered to your satisfaction.
Thank you. It looks like we have a question from one of our viewers, from Erica. My fiance and I plan to buy a house and then get married. Any problem with that?
I would say no, absolutely not. We, in our state, the state of North Carolina, it's when you buy, we would do it in both the fiance's, both parties' names. We would do 2 separate loan applications. You would both have 50% ownership. Once you get married, if it's just one party on the loan up front, the other party would automatically, by state law, have 50% ownership in the property. So absolutely, there's no problem when you guys are in the engagement process and plan to buy a home. It's pretty prevalent, and we see a lot of that more often than not.
Thank you. So another question, especially for young people or anyone who's first-time home buyer. You mentioned a down payment assistance. Talk a little bit about that process. I know that that's something that is of interest to many first-time home buyers.
Sure, I'll touch on one of the most popular down payment assistance programs is through the North Carolina Housing Finance Agency. It's located in Raleigh, North Carolina, but basically it's a bond program, if you will, and it's income specific, so you have to qualify based upon your household income, and it depends upon the county you live in, so your lender can help determine if you would qualify for the down payment assistance. It's also based upon credit score requirements. We can actually do a FHA loan, which normally requires a 3.5% down payment, but with North Carolina Housing, if you qualify for the down payment assistance, the state will actually give you, it's almost like free money. It's basically a second loan against your home that will give you the down payment that you need for the house. It's a 0% interest loan, and it's basically a second lien attached behind your first mortgage. You don't have to make any payments on it. There is what's called recapture, which means it's a 15-year loan, and the first 10 years that you have the loan, if you were to sell or refinance the home, whatever the down payment assistance through the bond agency, North Carolina Housing, was given to you at 0% interest, you would have to pay that off at the time of either selling or refinancing your home. Years 11, 12, 13, 14, and 15, 20% of that loan goes away for free. So it's a great program. Movement Mortgage is the largest North Carolina housing lender in the state, and it's not geographic specific like some loans are, such as USDA. So we can do it anywhere in the state of North Carolina if you credit qualify and you meet the income limitations. We can also do it on a conventional loan, which requires the traditional 3% down. But again, through North Carolina Housing, you could potentially get in for basically 100%.
Thank you.
Mm-hmm.
And so we haven't talked much about closing costs, but anyone care to elaborate on what closing costs are, how they're calculated?
Okay, I'll take that. Your closing costs are in addition to your down payment. So, for example, on an FHA mortgage, if it's a 3.5% down payment that's normally required, you have closing costs on top of it. A general rule of thumb, percentage-wise, is about 2.5% to 3% of your purchase price. Your closing costs consist of they're basically all third-party fees, and these are the parties that are all involved in the process. Once you go under contract and you apply for your mortgage and you go into underwriting, we have to have the home appraised. That's one of the parts of the closing costs. You have your attorney's fees. You have your loan commitment fees to the lender. You have title insurance on the loan for both lender's coverage and owner's coverage. You have to do your prepaids, which are, you have to set up your insurance and set up what's called an escrow account, which are to pay your taxes, the annual taxes on the home. Now, as a homeowner, you'll be responsible for the real estate taxes. We incorporated that as a part of your mortgage, and that's a part of your closing costs. So, in general, on most loans, about 2.5% to 3% covers it. And again, when you go in on your contract, if you don't have the money, it can be negotiated by your realtor to have the seller contribute those closing costs on your behalf. So you're actually only bringing potentially just your down payment requirement.
Thank you. Elisha, what are some common questions that people tend to forget to ask when they go into the shopping process when they're looking for a home?
Great question. A lot of times buyers don't think to ask about, or they find they're so focused on the home that they don't think about lifestyle choices. And so I often engage them throughout the buyer consultation to include things like hobbies or things of special interest that they may need to be convenient to, particularly with out-of-state buyers that are moving in to the Triangle area where I'm located. They may need to seek a specific church affiliation, and a lot of times they're so focused on trying to identify the right home that they're not mindful of other things that may be convenient for their commute. I'd say 9 times out of 10, the work commute to and from their jobs are important when making that consideration, as well as the school district. But I would definitely encourage buyers to include their hobbies or interests when speaking with a real estate professional that are available to them in their area. I have some buyers that are interested, they're really big fishers. I like to fish a lot, and so they want to know about local recreation and lakes that are available. So I think hobbies is a big one that a lot of buyers oftentimes miss. I am finding that many buyers in this market have a pretty broad or pretty fair base or understanding of the process with regards to details about their homes. Where I find they need the most guidance is with inspections and how to handle inspections, especially negotiating repair requests. There's often a lot of different ways in which those repair requests can be handled. A lot of times buyers will want to know if they can absorb the cost of repairs into the loan or what they should expect during that negotiation process. So in addition to hobbies, I might also add just a general understanding of the inspection process, details about the variety of inspections, and what to expect.
Okay. Doesn't look like we have any more questions from the audience. So with that being said, everyone, I have included contact information for Elisha, Michael, and Natalie. If you are interested in seeking their professional services, please note their email addresses and reach out to them. We appreciate everyone tuning in today. This is a recorded session, so feel free to go back and rewatch or share with friends. You can visit our YouTube channel for the UNCG Alumni Association, or you can also watch it on our Google Plus page. Again, thanks from the Office of Alumni Engagement. We hope you all have a wonderful day.
Thank you.
Thank you.